Hey, happy Monday, everybody. I'm building a $1 million portfolio right here on YouTube and sharing every step of the way transparently. I want to talk to you about the market a little bit today. As I film this, the NASDAQ is down about 3%, and then Cloudflare, which is this video is about, I just bought shares. I'm going to tell you why in this video. Cloudflare is down 12% today. It was down 15% after earnings last week, and I'm going to tell you why I think this is a buying opportunity and why I just started a position in my real money portfolio that I intend to hold for the next 3+ years. I still believe that this is a normal, healthy correction. These things happen in the market. I shared previous videos that showed just how often drops of 10, 15, 20, and even 30% happen in the market. They are normal. They happen. If you're a long-term investor, that tends to be a good time to be buying. And in my opinion, certainly not a good time if we're investing for 3+ years without using, things on leverage and doing crazy options and all this stuff. Definitely historically has not been a good time to sell out of things when the broader market has sold off by anywhere from 15 to 20 to 25%. Here's Cloudflare real quick, just to show you 12%. And then this is what this channel and this portfolio is about, 10K to 1 million. I'm adding money over time over the next 10 years, and we're building it for 10 years. If you like that kind of thing, you're gonna like this channel. Again, like the video, subscribe to the channel, help more people find it. If you don't like it and you want day trades and the hot stock of the day, there's plenty of YouTube channels for you to find that without the transparency, without the results, and that don't hold themselves accountable. This shows minus 50%. That's not accurate. That's just because of the way that M1 judges the returns based on when the money comes in. You can see the overall portfolio is down $11,400. So in total, we've put in $49,500. This is common stock. This is a platform where you can find investment research and have verified accounts. I have my account connected through here. And the account, if you do the math, it's really down around 22% since February 15th when I started this portfolio. Still not good, but it's not down 50%, and I'm confident that over time we're going to do just fine because I think I own great companies. Let's talk about Cloudflare. That's probably why you're at this video. So this is my email newsletter, austin.substack.com. I'm sharing snippets here on YouTube. If you want to go deeper and you want to see my full report and get access to everything else first before it comes to YouTube, austin.substack.com is where you can find that stuff. Anyways, I wrote today that, hey, I'm not trying to time market bottoms here. I don't know how to do that. I don't know what's going to happen over the next 6 months. But David Gardner, he is a co-founder and chief rule breaker at The Motley Fool. That's where I started investing, essentially. That's where I learned how to invest. He says 3 years is the shortest amount of time that we can truly judge investment performance. And I agree. So when times are good, I shouldn't get too excited about my returns or another company's returns over 6 months or a year. When times are bad, I also shouldn't get too down on myself or a company's returns over 6 months or a year. 3 years is really the minimum amount of time we should be judging our companies, our investment decisions, and ourselves as investors. That's not an excuse for being completely blind to excessive valuations, which I'll show you how Cloudflare got to an excessive valuation back in 2021. It's not an excuse for that. But I think that now is a great opportunity to be buying shares of great companies if we have a 3+ year time horizon. And that's what I'm doing with my own money. I might be early. Market may fall a lot more. I have no idea. I did a screenshot here that just shows the companies, the top companies in the portfolio. Why am I buying Cloudflare? Put 2,000 in this morning. Again, shared it with my newsletter before it happened. Here's the thing. Here's Cloudflare in a nutshell. This is not a deep dive, just my thoughts. Do your own research, obviously. But they serve more than 154,000 paying customers, with 47% of the revenue coming from outside the United States, and no customer represents more than 5% of annual revenue. So, broad customer base, 154,000 customers. I like that. 47% of the revenue coming outside the United States. That means they are geographically diversified. Then they're also diversified amongst customers, and we don't have any one single contract or customer that represents too much of the revenue to where if they lose that customer, it's going to destroy the business. That's what I like about that no customer over 5% number. Here's a quick primer to just how Cloudflare's platform operates. It's not a deep dive, but the thing I want to point out is that because they have to invest and build out a global network to power their platform to serve their customers, Cloudflare requires more capital spending, capital expenditures than other software as a service style companies, if you've heard that terminology, businesses like Datadog, Atlassian, and others. So that's a disadvantage from the standpoint that it costs more for them to run and grow their business than some of those other types of businesses. But when it comes to competition, I think it's actually an advantage because Cloudflare has now spent all of these years and all this money and had all this experience, all this data, building this platform, investing in this platform, growing geographically across the world to serve more customers. It's a lot harder for a new company or another company in other markets to build out the infrastructure in the platform that Cloudflare has built and start to take market share or take customers away. So in a way, yes, it's expensive to run their business, but it's also an advantage to Cloudflare over time. So they're still growing their network. They're in 270 plus cities. They plan to go to over 1,000 plus, to get into 1,000 plus of the world's busiest office buildings and multi-dwelling units to link directly with the Cloudflare network in the future. They have 10,500 networks, 142 terabytes per second of network capacity and growing, and then 154,000 paying customers, 63% year-over-year large customer growth, 95% of the world's population is within 50 milliseconds of a Cloudflare data center. So that's how they have speed and reliability. Why do I think this is a timely opportunity? Again, I don't know. The stock could drop 10, 20% more. I mean, it's already down 10% from where I bought it, so who knows? They just reported Q1 2022 results. And again, the stock was down 15% after those results and is down 12% today. Revenue for the quarter was $212 million, up 54% year over year. Gross profit margin was 77.8%, which it's up from 76.8% in Q1 of last year. Dollar-based net retention, that is how much on average their current customers spend in the following year. So if it's 127%, that means the customers they had last year on average are spending 27% more this year. And so that's almost like free marketing. They're getting customers they currently have to spend more money that they don't have to go out and sign up and market to. They are doing marketing to bring in new customers, but it's really nice when you're getting 27% more revenue from your current customers already. And that was up 4% year over year, which is good. They're increasing that, and it probably won't keep going up. 127 is a high number, but it's still good. They added a record 14,000 paying customers in the quarter. My thesis is that what Cloudflare provides is more relevant and more important now to customers than ever before. And the way that Cloudflare provides it in a kind of bundled type package where a customer can go and get basically everything they need from Cloudflare and not use a bunch of different vendors is actually becoming increasingly important when we think about people potentially wanting to cut down costs and simplify things. They can't cut down, if a business is going to survive, they can't cut down on their infrastructure and their network security because that could just be catastrophic for the business. So I don't think business is going away from Cloudflare. Customers spending over $1 million per year grew by 72% year over year. And here's the key financial highlights. This is what we just covered from the earnings call. Again, this is in my email newsletter, austin.substack.com, if you want to see this and save it and get all the other emails too. They provided guidance of 49% revenue growth in the second quarter and 45% for the full year. And they anticipate returning to free cash flow positive in the second half of 2022. This company's got a great long-term model, in my opinion. They had a strong second quarter. They're set to have a strong rest of the fiscal year and grow revenue by 46%. It is not a profitable company on a regular basis right now because management is trying to invest for growth. I believe in management. I believe in this model, and I'm okay with pushing that profitability off, much like a small company like Amazon has done for a lot of years. And if they get it right, and if they continue to see good results, I think this investment will do great over time. Here's management's long-term model. They want to get gross margin. They want it to be between 75 and 77%. It was 79%, so they're tracking ahead of that. Sales and marketing as a percentage of revenue, between 27 and 29%. It's 42%. So over time, they plan to spend less to acquire customers, down to 27 to 29% than they are now, 42. That's how this business is planning to get more efficient as they scale and grow. Research and development was at 19%, which is right where they want to be. That's good. They got to keep their pace of innovation to keep releasing new products, outpacing competitors. So we want to see that stay. We don't want that one to go down. General administrative as a percentage of revenue was at 15%. They plan to get that down to 8 to 10. Non-GAAP operating margin, 2%. And so the efficiencies that they plan to improve over time is how the management intends to make this business more profitable, at least on a non-GAAP basis, and get to non-GAAP operating margin of 20% plus, up from 2% now. Great business, I got it. I want to own great businesses. I want to own them long-term, but valuation does matter. And let me zoom in a little bit and just make sure. So this is Fast Graphs. Many of you, if you watch this channel, you've seen me use it before. I've just got it copied and pasted into my newsletter. In November, the stock traded up to $2.11 a share at a blended price sales ratio of 104. That was insane. And it's why I didn't own the stock before. I've made plenty of mistakes, so I'm not like claiming victory here. But I just couldn't get on board with Cloudflare at that multiple. The stock's down like 75% from its highs, and it deserves to be down a lot, I think. But now it's gotten to a point where I can see a path to getting good returns in the future. I'm about to show you in just a second what the future might look like. It's a real business. The platform is more important now than ever. I think this reset gives us a good opportunity. So the current blended price sales ratio is still 27. That's a bit high, and the stock, again, could go down another 10, 20% from here, maybe 30%. But I think we're at a point now where the stock price doesn't have to drop for the price of sales multiple to get more reasonable. How does that happen? How does a multiple get more reasonable without the stock dropping? If they can grow revenue by 40% for the next year or more, that will help bring the multiple down, even if the share price doesn't go down, because they're going to have more revenue, and so that changes the equation. If the stock does drop more from here, then the company's revenue growth over the next few years should provide a margin of safety. Ticker, which is a service I pay for that gets their data from S&P Global Capital IQ, which is just a very respected aggregator of financial data, has analyst expectations for revenue to grow 46%, 34%, and 31% in calendar year 2022, so this year, through 2024. In calendar year 2024, analysts expect Cloudflare to have $73 million in net income, so we're getting more efficient there, and $66 million in free cash flow, and an adjusted earnings per share of $0.20. So business is getting more efficient and more profitable. So what I did was I used Fast Graphs to insert custom growth estimates for 2022 through 2027. It allows you to do that with revenue per share growing 41%, 36%, 34%, 30%, 30%, and 26%. So revenue growth is still growing pretty well, but decelerating. That means we're not, we don't have, this model that I've built, this example that I've built, it's not saying that revenue is going to grow 40% for the next 5 years. I think that's unrealistic, or at least that's unrealistic for me to expect and build into any type of model. And it has the price of sales multiple of 10 down from 27 today. So revenue deceleration and multiple contraction, meaning the price sales multiple is going down from 27 to 10. Investors would still see in that scenario a 10% annualized return. With a price to sales ratio of 14 in 2027, investors would see a 17% annualized return. I don't know what's going to happen. I'm not predicting that they hit all those numbers and they trade at a PS of 10 or 14, but I think those are reasonable things to believe, and I'm comfortable starting a position and being willing to add to it over time if the stock does continue to sell off. Because again, this is a long-term portfolio, 3+ years, but I'm setting this thing for 2032 as kind of the end timeline that I'm building this towards and sharing here on YouTube. And so that gives me plenty of opportunity to buy more. I'm not in a rush. Don't have investors breathing down my neck to take their money back if I trail the market. So I might trail the market for the next 6 months or a year. I'm okay because the rest of our finances, our family finances, are in order. We're not using leverage and margin and options and need the money in the next year. I'm building a process to be a long-term investor while I still spend time with my family, still work a job, and still have fun and do things outside of just staring at the stock market. I hope that this channel can inspire people, inform people a little bit, educate people a little bit. By no means is it financial advice, just sharing transparently how I'm investing, because investing has changed my life. I want to help others do it. If you like what you see, you want to support the channel, following me on commonstock.com/Austin is super helpful. Again, you can see my portfolio performance and my trades. Subscribing to my email newsletter, austin.substack.com, is super helpful. And then liking the video, leave me a comment, ask me to review a stock. I'll do user request reviews. And then subscribe to this YouTube channel is super helpful. Thanks. I hope you have a great day and take care of your mind, your body, and your money. Don't get too down on yourself out there in this bear market. I believe this is the time to be buying.